What's good, future millionaires? We back with another banger. I'm December DeMarco, Fortune 500 marketer, here to share my insights of the market with y'all to hopefully help y'all become better informed investors. And this is why we chop these markets up the way we do. This is why I tell you, do not allow the market to shake you off. The weekends have to be shaken loose, and we can see that was absolutely done. Today we got the crypto market back at $1.08 trillion. This is a very, very important number, up 7% right now. We got Bitcoin right back up 10%, sitting around that 24,000 range. Ethereum right back at 1785. We got XRP at 37 cent, Cardano 34 cent, Matic 120, Doge 7 cent, Solana 2061, DOT 615, Tron at 6 cent. We got Sheeb at 15 place by market cap, but sitting back at 1114 and up 3.3% right now. Let's take a closer look in at Shiba Inu as we get into, what's taking place in the markets. So Shiba Inu's volume is up 104%, sitting at $430 million, y'all. Absolutely massive number right there to just jump up in one day. This lets you know when the market is fearful that it's time to be greedy. Why? Because you get the load up for a discount, and possibly, depending on if you're a short-term trader, you could take profits. If you're a long-term investor, then you just made some gains added to the portfolio, and you were just able to accumulate more assets for a cheaper price. And this is what investing is all about. So Shiba Inu right now looking absolutely good, sitting at a 6.1 billion-dollar market cap. Yes, we would like it to be higher. Yes, we just got the release of Shibarium beta, but nonetheless, we had to take into account the overweighing factors in the market. We just had three banks basically go under: Silvergate Bank, Silicon Valley Bank, and Signature Bank. These are three top crypto-friendly banks that are all basically having trouble right now. So eventually we're going to feel that throughout some of these assets as these exchanges lose liquidity providers. Trading will become more expensive. Buying different crypto assets will become expensive because, there's less and less vehicles or avenues available to, get that liquidity from. So I'm really just prepared, to just hold out whatever, we're going to go through right now. I think, like I said yesterday, I think we're kind of back at the bottom of that mountain, but still, in a positive direction. It looks like the market has priced in this bad news. Normally, when there's a negative catalyst like this, the market will be hit, but eventually the market prices it in, as soon as possible. The market doesn't really, have things that take place, and then, you feel the ripple effect from that one thing, 2-3 months later. Usually, it's from hidden things that pop up later that cause the market to continue to pull back. But when there's one issue, the market can see what it is. Okay, this is the negative issue. This is how the market will be affected price-wise. Here, everything's priced in now. Now, if there's things that continue to pop up down the line, that's when we continue to see things get worse and worse. But right now, as it stands, it looks like it's all priced in. It looks like the market has rebounded, found where it wants to be, and now we can continue on this journey. So, let's take a look at this article right here. Very important just to get an understanding. Let's see. So, Bitcoin was built for this moment. Amid a U.S. banking crisis, value is flowing into Bitcoin. Is this the beginning of the Great Reset? Investor and author Tatiana Kaufman asks. So the failure of Silicon Valley Bank, Silvergate Bank, and Signature Bank continue to ripple through the markets, causing U.S. bank stocks to plummet. Most recently, Charles Schwab stock was halted in trading Monday morning. Meanwhile, Bitcoin and the rest of the cryptocurrency market are experiencing a double-digit rally, which may be the first time that Bitcoin is rallying in a risk-off environment. Perhaps this is exactly the moment Bitcoin was built for. The Bitcoin network was created as a direct response to the financial crisis in 2008, during a period when many hardworking people felt both the government and the financial system were working against them. In fact, the very first block of Bitcoin had an inscription in the code. The Times, January 3rd, 2009, Chancellor on the brink of second bailout for banks. Now that regulators are gearing up to backstop another centralized financial institution, which collapsed in part due to an aggressive monetary policy at the Federal Reserve and what appears to be either poor risk management or greed, it's important to heed Satoshi Nakamoto's message. For years, I've been talking about the Great Reset, a concept that advocates for us to stop trusting centralized institutions with things that matter most. After all, these institutions are run by people who are not necessarily better or smarter than us, but they make all the decisions and mistakes for us. Bank runs. If we look at the sequence of events over the last week, we quickly began to recognize the errors of human centralization. Last Wednesday, Federal Reserve Chairman Powell outlined a new approach to the Federal Reserve policy path, indicating that interest rates may continue to rise for a longer period than previously expected. The expectation of higher interest rates for a prolonged period of time almost immediately sent a ripple effect through the bond market, causing bond prices to drop drastically because prices move opposite to yields. At the time, Silicon Valley Bank was forced to sell some of the 10-year bonds on its balance sheet at a 20 to 30% discount to meet obligations amid a period of climbing withdrawals. As rumor of a crash shortfall began to circulate, a full-on run on the bank ensued and regulators took over. This caused even further panic. So basically, they bought out 10-year bonds instead of buying, the shorter, 3-month bonds or 1-year bonds. They bought these further out bonds, hoping to make more money on the deposits that the exchanges were giving to these banks, because these are the banks that, exchanges like KuCoin, Gemini Exchange. These are banks that exchanges like those were using to place the funds that when you buy something on, or when you load money onto Gemini or KuCoin, they're not just in a sense holding on to all that money. Some of those USD deposits or just regular cash are held in an actual bank, and this is one of those banks. So the bank was hoping to make money by buying out these longer term bonds and hopefully getting a better return from them. But they were forced, after the markets pulled back and people started to request higher withdrawals at a higher rate, they were forced to sell some of these bonds at a 20 to 30% discount. So what does that mean? A 20 to 30% loss. Because if you execute them earlier, if you decide to sell them earlier, then you have to take a loss on them. So let's basically say if you were getting a $100 bond in 10 years, you can make, let's just say, you'll make a full guaranteed 2x on it or whatever. But if you decide to sell it before that 10-year period, then or let's just say a 1-year bond, if you decide to sell it before that 1-year period, you have to take a penalty for selling it, which is making you sell it at a loss. So when they had to do that with millions of dollars, that put them basically at a negative. They had less money than the money that they owed to actual customers. So that's where the FDIC had to step in and basically shut the bank down. So could every regional bank go under? After all, according to fractional banking rules, most of these banks only hold 5 to 10% of your capital in reserves, making every bank vulnerable to a bank run. And then there was the obvious question as to who led the risk management department that decided it was okay to buy 10-year securities for an institution that has daily cash flow obligations for the depositors. When the current economic slowdown began last year, many were worried crypto failures such as those at FTX, Three Arrows Capital, and Terraform Labs would spread to traditional finance. But the exact opposite happened because the Silicon Valley Bank failure directly impacted the stablecoin market. USDC DPEGs. USDC, the second largest US dollar peg stablecoin after USDT, is run by Circle. Circle's model is simple. It takes your money and gives you a digital coupon called USDC. Then it takes your money and invests in super liquid 3-month US Treasury bonds currently yielding 4.87%. What could be safer? Well, Circle reasonably decided that it should still keep some cash on hand and spread it across 6 different banking partners, one of them being Silicon Valley Bank. As SVB began to go under, Circle announced it had $3.3 billion deposited with SVB, creating a hole of over 5% in its balance sheet. Panic ensued as USDC lost its dollar peg and dropped below 87 cents on Saturday. Traders quickly switched to Tether, the largest USD stablecoin, although questions have been raised about its issuers, business practices, and reserves. I personally chose to move a large portion of my holdings into Bitcoin, apparently like many. So in the face of this, people are seeing, the banks that keep the stablecoin stable are collapsing. So in turn, it's depegging the stablecoins, meaning stablecoins should be at $1. To see USD, US, which one was that? USDC go down to 87 cent, per coin. It's crazy when it's supposed to be at $1. And remember, I even told some of y'all that it would be a good chance to snatch up some, because we know eventually, it should repeg. That's if you, believe in the chain. But, it's a very, very risky situation. This is why also we want to keep our funds on a cold wallet. keeping your money inside a centralized exchange is basically the same thing that happens with these banks. Once the bank goes under, your crypto is gone. So same thing is like, if you're holding your funds on, let's say Binance, Crypto.com, FTX, for example, Voyager, for example, any of those central exchanges. Don't get me wrong, Binance and Crypto.com are cool right now, but it could happen the same way it did with FTX and Voyager. If they collapse, the funds that you have on there are gone. So you should have the majority of your portfolio. This is not financial advice. I can't tell you what to do. Can't tell you to buy, sell, or move anything. But I'm just saying, safety-wise, it's best to control your own keys to your wallet. So that way, at the end of the day, you're in full control of your assets. You don't wake up one day and unless somebody attacks your wallet and does something malicious because you connected to a bad site or something like that. But aside from that, if you're just using it to store these assets, you don't have anything to worry about. Just don't lose that seed phrase. But this is a crazy situation that we're in. I'm glad to see that the market is bouncing back right now. But let's continue with this article before we get out of here. So the deep pegging of USDC is significant because Circle, considered a highly regulated and secure business, was poised to go public as a separate entity. The incident provided a wake-up call to investors, demonstrating that not your keys, not your coins, so this is just what we were talking about, applies not only to banks but all centralized entities, even those that run on our stable coins. Circle tried to restore trust by announcing it would use its corporate resources to cover any shortfall, which caused the stablecoin market to rebound by Sunday evening. As a result, USDC and DAI, which has significant USDC reserves, has returned to their dollar peg, and it's expected that USDC will now trade at par after compensating for SVB depositors. But is that enough? So who do we trust? Our assets may be bouncing back, but the shock to our nervous system, however, remains. How can we trust any centralized exchange? How can we trust anything centralized? How can we keep our money in the banks above the FDIC insured limit of $250,000? Could the insurance fail? How can we keep our money in stable coins that use the same banking partners? Bitcoin's beauty lies in its ability to store value in a decentralized manner, backed by math, without requiring humans to validate or support it. No one lends out 90% of your deposits to make a profit. There is no possibility of a bank run, and no one gambles with your hard-earned money on bonds. Bitcoin was made for this moment, and it seems the market agrees. The Great Reset presupposes a future where Bitcoin is the most valuable asset and the ultimate measure of value. It is what we use to store our wealth, perhaps selling small pieces for stablecoins to pay our daily expenses, but nonetheless only trusting this decentralized store of value. The concept of decentralization, however, applies to other areas as well, such as how we run our communities, allocate resources, and decide what our government should or should not control. A significant shift is underway, and more people are opting out of the traditional system. We do not know how long it will take, but the Great Reset is happening, and Bitcoin will be its chosen currency. So, definitely this is what Bitcoin was made for. Times like this, when the people lose trust, in the other, centralized, mediums of, basically holding on to our funds, Bitcoin is always the answer. So, hopefully, y'all are, seeing some light at the end of the tunnel, in the crypto space. Hopefully, a lot of y'all didn't get shaken out. Hopefully, my viewers, my subscribers are, not the weak hands who, get shooken out of the market just because things pull back for a week, because now look, everything is right back on par where we were, when I was telling y'all that we are slowly going to move to that $1.5 trillion market cap level. So this is why you buy the dip if you want to, not financial advice, but this is why you diamond hand, because yes, things can be rocky. It's a roller coaster, but things always, usually history shows us things usually return and go higher when it comes to stocks and crypto. So that's all we got for this video, man. Shout out to everybody for rocking. We make sure y'all hit that like button. I know this one was a little more, information news type focus, but this is important to understand. So that way y'all really can comprehend what's going on in the space, and it allows you to have a stronger confidence and less emotions when it comes to your investments. Look at this, BNB back over 309. Everything looking cool right now. So appreciate y'all for pulling up, and we are